Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this wrap-up is for Monday, the 15th of June, 2020, about 5:45 p.m. Central Time. All I can say is, wow. You wake up early like I do, and I'm looking at the market, and it's down 500 points, and then I'm watching it accelerate. This is about 4 in the morning, 4:30, and I'm watching it accelerate lower, and the market is down 700, 800 points. Whoa, this is getting to be big numbers. I think it got down on the futures near 1,000 points lower, and then the turn began. And you're watching why's the turn, and the turn came from Fed help again. It doesn't matter, COVID-19 is again popped up in a big area in Beijing, and it's a large area. The stalls where the vegetables are and so on that it broke out, they claim, is 20 times the size of what happened in Wuhan. Not the infection amounts, the size of the stall. Apparently, China is saying it came from salmon that they tested on a cutting board that came from Europe. How does salmon keep it for more than 3 days? I don't know. I'm not a doctor, so I'm not getting involved in that. What was interesting is the market gave up on the attention that in Phoenix, well, actually Arizona, Texas, Carolina, North Carolina, and Florida, Washington, the cases are all shooting up in the U.S. again. So the market shakes that off, moves with the Fed, because the Fed says later in the day it's going to tomorrow start buying and diversifying the corporate bonds that it's been buying. So they're going to be buying more, I guess, from more companies. I don't know all the particulars yet. It didn't come out when I was looking before I did this. But the fact that they're expanding it, the market decided the Fed has our back and away we go. And so you had a monster rally happen today off the lows. Now, not all the way up today, but off those lows, dramatic. You knocked down at one point the gold, which I expected. If the market was in trouble, the pattern has been to knock the gold down because I need money that has been in basically a bull commodity as well. Take that off, it's been stable, I'll support my other holdings. I get it, I understand the thinking. Crude was down sharply because you're worried about the economy getting shut in again, but the fact that the Fed is throwing money at the economy, that changes things. You know it doesn't. That's my point. The Fed does have the markets back, and that is the psychology at work. Nobody has a treatment yet or a cure for COVID, and the case numbers are rising. As for the reason, I'm not a doctor. I know there's more testing going on, and there's more being discovered. That I give ground with. But I'm also seeing in the states I mentioned, people are just around as though it's all over, and this thing is not all over. So when we take a look at what the stock indices did, we had one heck of a rally up here, and the market is corrected. Now, let's take a look at what that high point was. On a weekly chart, the recent high is the 3186.75. The market broke back here about 150 points, and right now where it's at, well, we're still down about 100 in round figures from there. But we haven't done any damage, actually. We're still not under the 18-week moving average of closes, which means the bias is up in this market, and we haven't had a pattern where you've taken out a low of a previous period. So far, each weekly low has been better than the prior. Do you see what I'm saying? You're not getting one that's up and then you're swinging back through it. That's the important part. When we take a look at what happened tonight, the market cleared this high of yesterday. Now you can see what the market did. We were down hard. You closed at, 30.23. You got down to 29.23. That's a 100-point break in that market, and you made it all up and you bounced right here. When we add to that where we're at on this chart, you have a higher high, a lower low pattern. You are not trending. That's number one. Where's the market in terms of bias? By putting 18-day average on the chart, you see what the market did. Now let's go back and take a look at a few things. Here is the market last Thursday. I didn't do an update with you on Friday, so I apologize, but I talked on this day. And if the market is going to break from here. I'm going to look for the 100-day. It's getting into serious support. That is the word. The market comes back, hangs there. This is the Friday action. Today it reaches down and comes back. So these moving averages to date have done their job of acting as support in the market. Not a buy signal, but support in the market. And they're also acting as a resistance point at the 18-day average of closes. What I teach in my charting courses, markets often go back to that 18-day average to figure out what to do next. Where's the Bollinger Bands? I was surprised that the market didn't exceed this break to the Bollinger Band. I was looking for it, be it today, tomorrow. Now I don't know what to expect. I certainly didn't see this big rally coming back in the market today. I also, so you'll know, neither bullish or bearish on this market. I have no opinion on it right here because you're not trending as I define a trend. In momentum, we had an embedded reading that when you lose it, that's lost. You're looking for the 18-day average. It rarely happens all in the same day, but it did in this particular case on Thursday. Now you're just bouncing around that area. I don't see anything there. In the Nasdaq, you're still in what kind of market? Well, if you take a look, I want to make sure my numbers are right. I don't know that they are. This is the low that I'm watching right here. And that low is 91.67. That was the last important low. Here we had an outside, let me just show it to you, an outside day down. And if you take it out, I'm looking for the Bollinger Band to be hit, which the market does. Gets through it, and then the break happens today. And you get to 95.72, and this is, I said today, this was Thursday, this is Friday, this is today. It doesn't look to me like you got through that number. So I should have the two arrows, I believe, pointing up like that. Momentum down, fighting at the 18-day average, trend basically still up. And what has the market not been able to do so far? This is the strongest of all the markets. It stayed up over the 18-day average on a closing basis through this whole process. Very impressive. The market that is in the downtrend is the Dow. It's got lower highs, lower lows. So the break carried, and let's go back to Thursday. This was Thursday's action. I apologize. Thursday's action. Will we take out this low? Market playing around. Now that low is taken out, and that happened today. And now you're getting a bounce. What would negate this pattern? You have to take out 25,816. So far, the high tonight, 25,807. So that would break the bear pattern. I think the pros are probably defending short positions right around this level here, trying to see if they can get the market up or down. If that comes out, there's no signal I have here that can turn the trend up. You can keep the trend down is about all that I can say. Momentum down, and if they can keep it under that 18-day average, trend down, bias down, this part down. In the Russell, the market is one of these broad swinging markets also. You have a market that made a high, and then in this break, the lower low, and it's fighting its battle at the 18-day average. Crystal clear, and momentum flattened out. Now, did it ever hit the lower Bollinger Band? It missed it. You got to 1450, you didn't quite hit that, and the support were these averages. So the one thing we've seen on all the markets, the main moving averages, the 100 and the 18, were supporting the market. Depends on the chart you're looking at where the 200-day is. In the VIX, we had that big run-up, but again, when I left you last Thursday, I had said, I still think the pros on these breaks are selling puts when you're getting down there to get back to the closest moving average, and they've done it. I certainly, in a market with COVID, don't expect the pros to be selling calls because you never know what you're going to wake up to. If there's another huge case, God knows what happens. So I think that they're more comfortable just selling the puts on that to get back to the closest average. In the T-bond market, okay, we've had a pattern now of higher lows. We've got the higher high in the chart. The question is, to break this market down, you've got to get through 176.22. You're fighting at that number right now tonight. If that happens, you go flat again against what key number? that 18-day average. Now, we did have a downside breakout in the charts. Downside breakout would mean if prices fall, yields are climbing. We know that the yields dropped from 0.9 roughly to 0.66 recently, and now they're hanging here, probably closer to 0.7. I didn't look where the cash was. And I'm talking the 10-year, obviously. In the 10-year, you have this big reversal down. See this day? So the low on this day was 138.18. You took that out. You have an outside day down. In order to get a bear trap going, you've got to take this market and get over today's high, which was 139.03, and then it portends a move up here. If it got up there, it would take out all these past highs and it'd put into question, did you actually have a downside breakout that the market's gone nowhere on? And so far, that's been the case. The market has pulled back. Do you see this band here? You had 3 days out of it, and you pulled right back into that. Very strange. In the dollar index, frustration hit me hard Friday. I didn't look for this market with all this embedded and all to lose that on this day. Here the market comes up Thursday, and I'm going, okay, I think the pros are still going to sell it. Market lost it on Friday. I was very surprised. And you had the reversal in the euro and so on. Just a frustrating day. Currencies normally are the truest of all the markets. They're the biggest of the markets. People trade money around the world. And you lost the embedded reading. Are you going to get back to the 18-day average? You could. That's going to be something to see. One of the tip-offs today to me, where I started questioning, here's the market coming down off the COVID early in the morning, all these COVID cases in the US and China, and the dollar staying lower. That's not how it acted on Friday. On Friday, people were running to the dollar for the safety on the fear of COVID. It didn't do that today. The eurocurrency had the flip-flop of that. Instead of continuing its uptrend, it lost its embedded reading. It, to me, owes getting back to the 18-day average of closes. I think some contra trend traders are selling this and buying the dollar to see if those numbers happen. In the yen, we had one of these wild downbreak, vertical rises that just sort of flattens out. In the process, the Bollinger Bands are, what did they do? They widened out a little, but they want to stay sideways. I don't see a trend play out of this at this point in time. I see an overbought market that doesn't trend. It's got a higher high and lower low pattern. Wouldn't be surprised if it wants to get back into that 118-day average to see what next. The Bitcoin. Now, I'm moving to the September to follow. I'm keeping the quotes on the quote board in June, but I'm watching this already because we expire in a couple of days in the June. I'm looking for the battleground, the 18-day average in sideways action. The volume will move here. Open interest is small in this market. Hope you understand the difference. Open interest, amount of long and short contracts combined, which makes a contract. Volume is what traders do. They day trade the heck out of this market, and it's very much in a sideways pattern. In the Brent versus WTI crude, well, we're back up to a number we haven't been in a while. The market got up, as you can see, on Friday. It closed at or slightly over the 18-day average of closes in red, and now it got over it today, and it's just sort of playing a game here. But what a wildness in the energy. You've got the trend down, and the market has not been able to close under the 18-day average of closes. So it's never thrown out what I'll call a verified sell signal. It ended an uptrend, but it didn't start a downtrend because you'd have to have the swing line down, prices under the 18-day average, and momentum pointing down. Momentum was pointing down, but you couldn't get that lower close. Now I see resistance right here at 40.30. We're going to get the API number tomorrow. I personally am looking for demand because the roads in Chicago are crowded. I went downstate Illinois over the weekend. It was crowded down there. People are back on roads. We have rush hour again in Chicago. We don't have restaurants open. I don't know where all these people are going. And I'm talking open to go into a restaurant, but they're going somewhere. In any case, I think you're going to see more consumption, and we'll see if that's the case. We know we keep losing wells, although we're probably hitting a trough now. I think we're getting to that right now, that low point in well losses. And we're at record lows in modern time. When you look at the WTI, you see that that's our oil. This was obviously the Brent part of it. Same thing though. You wouldn't know which chart you're looking at. The market had a swing line down. It went to the 18-day average, the line in the sand, and just holding there. Rebob gasoline, same story. Right down to it and holding these key moving averages to see where you're at. And in the nat gas, there's just too much of it. I don't know what else to say. We're not getting rid of it. These are new lows, contract lows very possibly. This market's not getting away from all that because as the wells come back on, you get more natural gas, and that's going to be the new problem. So new supplies coming back. So if it couldn't rally when we were taking off all this, what are you going to do as new supply comes onto the market? You know I'm putting out my morning subscriber video. Now, for those of you that are looking to combine the morning subscriber and the ETF, today we put up, if you go on our website, under the word research, and you click on either, you're going to see we have a new combo pack. So I'm giving a discount. If you go to our website, look for the word the combo. As you go into either one, you'll see it, and we're giving a 10% discount if you take both. If you're already a subscriber to both, let our brokers know. We'll alter the whole thing for you to make sure you get that as well. So with that, I'm Ira Epstein. You have a good day. I'll see you tomorrow.